Hey, good afternoon. This is Rich Robinson, Robin's Ag Market with today's post-close grain and livestock comments for Friday, December 19th, 2025. We'll do the daily and the weekly changes. March corn down 3/4 cent, 443 and 3/4. Uh, a pretty quiet day. I'm looking at a 2 1/4 cent range. In jam beans, also kind of a quiet day. We did hit a new low for the move overnight at 47. We traded as high as 54. A 6 cent range, very, very quiet in the beans. We settled down 3 cents at 10.49 1/4. That's jam beans. March Chicago wheat finished up 2 cents. It's still trying to come off of this contract low. Kansas City March settled down 1 3/4 cent at 5.15. Kansas City is not taking out its contract low at 4.98 3/4, but wheat continues to struggle there at these contract lows and 5 year lows. And the soybean meal, a 3 cent trading range during the day. We did finish down um, 1.2 pennies at 301 and change. It's an opportunity. One way you look at it, it just depends on what your perception is. But 2 month lows. Remember back in October, we were at 283. We spiked to 335. This 301 level is going to be a big fight range as we finish the rest of the year. I don't expect a whole lot of action really for the next 2 weeks. This week coming up is going to be Christmas. We'll have a half day. We'll be closed Christmas Day. We'll be open again Friday, so it'll be one of those weird trading weeks. I think most people are kicking the can until the January 12th USDA report. I think most people are watching the 200-day moving averages in both corn and beans. If you look at jam beans, we are fighting it out right there. We're under the 200-day currently. We did make a new low for the monthly. We dropped $1.22 in the last month. Bottom line. So we had that $1.57 rally. We gave back $1.22 of it this week. Any way you cut it, either was an opportunity or a missed opportunity. The 200-day moving average is at 10.54 3/4. We settled at 10.49 1/4. I want to see where we trade next week. But again, I would expect thin and trade next week. A little bit of a silver lining. Excuse me. We did dip below 212 today in um, diesel fuel. We traded as low as 211. That is a new 6 month low. We're back to where we were in June. I got to think we didn't come all this way to go see what happens if we look at $2 heating oil. In crude oil, managed to stay above 56 bucks, settled at 56.66. Got to remember this week we did trade at 49.97. Uh, that was a new 5 year low. So I wish it was 49.97. Excuse me. Take that back. We took out, we traded 54.97. And, we'll see if that holds up here in the next week or so. 54.98. That was the low on the 16th. So 3 days ago, that was a new 5 year low. So we bounced back a little bit. I can't see anything getting interesting until we get this contract back north of 60 or 62. That might trap some people. In the meantime, we're going to see, is this an opportunity for end users? If you buy a lot of fuel, I got to think that it is. Again, take a look at that if you're a big end user. Let's see what else is going on. Natural gas settled below 4 cents. You guys are watching that because it's going to affect fertilizer. Got to round it up with the protein complex, higher across the board. Fed feeder cattle finished up 240 on the day at 230.8. March feeder cattle finished up 4.8 at 339.40. We were getting up into that gap. We have not filled that gap yet in March. We're going to see if that gets done next week here. Cattle on feed came out. All the numbers were lighter than expected. I'm looking at them right now. The major summary shows, cattle on feed lower than expected, placements lower than expected, and marketing is lower than expected. So is this already factored in? Is that one reason that we We went bid into the week. I don't know. We'll see what happens. Weekly changes, right? Fat cattle up $1.25. Feeder cattle up 5.33, and hogs, that was the lone loser for the week, just down 40 cents. But definitely feels like that competitive traders data was cooked into the books here. Especially, we rallied $10 from Thursday's low. Um, we'll see how we trade on Monday. But again, I think it's more about the gaps than anything else. No new big anything astounding in the export market. We did get some more Chinese sales of beans, but the bottom line is they still need to get a lot more to help turn this boat around. That being said, it's nice to see November new crop beans sitting here at 1067. You got to remember back in October we were 1048. Yes, we did trade as high as 1131, but we'll see where we finish next week. New crop corn finished at 462. Again, I think as long as we can stay north of 460, 450 until we get through that January 12th final production number, that's going to be huge. So, enjoy your weekend. Lots of football out there. It's cold here again in Chicago. It was about 45 yesterday. It's back down to 15 degrees here right now. It is going to be the Christmas week. I don't imagine a whole lot of business going on. So thank you for checking in. Again, I'm Chris Robinson, Robinson Ag Marketing. If you're looking for help, I'm very technically based. I keep track of all the levels that I think are important. I work with both end users and producers. I spent 22 years trading my own money on the floor of the Board of Trade. I spent the last 15 years working with farmers and producers. So if you're looking for help with your marketing, give me a call, 312-638-8868. Have a great weekend. Take care.